Well, welcome back, everyone. Another great day in markets with a very important day ahead of us. If we take a look at the Champion Trend Pack Toolkit applied to the S&P 500 futures and, of course, the NASDAQ futures, we start to get a sense of where we are in an overall move. Now, what I want to impress upon you here is when we look at both the NASDAQ on the right-hand side and, of course, the S&P 500 on the left-hand side of the screen, we're in a signal state that on the surface is obviously green. You can see on the S&P E-minis, we had a buy zone from the Champion Trend Pack, the Champion Cross Indicator, which is the opaque dark green zone, with the main chart at the bottom of the chart indicator being lit up, constitutes a buy signal state. Now that existed back over here, and that was really on the 9th of May for both. And this is a futures chart, so you've got the future session for the day starting 6 p.m. the day prior. Now when you take a look at the very next trading day, right over there, you can see an orange ball that I'm highlighting with my cursor, and that is wealth signal. Now the reason I'm pointing this out is on the 9th, we ended up seeing a trading day that started a sequence of signals that has 3 stages for the Champion Trend Pack Toolkit. And that would be stage 1 with Champion Trend, Champion Cross. Stage 2, wealth signal. Stage 3 is usually remarked by breakout forecasters, which are these dashes here. 2 of them in a 3-bar radius is enough to say we're in stage 3. Now they continued up until Thursday last week, and what we ended up seeing on the 16th of May, 15th of May future session carried into the 16th, was the last breakout forecaster, and now we've had an absence for 3 days. Now you can also see that there are other tools beyond the Champion Trend Pack layered on price. Rob's TRP toolkit, Rob's ITP toolkit, and I've also got the Triple S toolkit on here as well. Now I've kept the subcharts suppressed because I want you to focus in on the sequence of signals, and the insight being, if we have an absence of breakout forecasters for 3 or more days, and we start to see in particular the speed lines, which is what I'm focusing in on now, the magenta and the blue speed lines compress, there is some risk of a pullback to the last or second last breakout forecaster. Now, the last breakout forecaster resides around 52.80 for the ES. Second last resides down here in the 52.30 area. Now, is that risk? Well, yeah, that's risk on the table. However, tomorrow we've got several events. We've got the event of the 20-year U.S. Treasury auctions. We're going to get results on that at 1 p.m. Eastern Time. We've got the FOMC meeting minutes, and we've got, of course, NVIDIA's earnings after the bell. Now, the reason I've got the ES, the S&P 500, juxtaposed to the NASDAQ, is the NASDAQ is not yet in a state where the signal risk is the same as the ES. Okay, we don't have 3 days of absence of breakout forecaster. We've got 1 day so far, and the day is technically not closed until the future session ends at 5 p.m. Eastern Time. So we still got more to tick away at, but so far, I don't have a breakout forecaster, and I do have compression between the fast and the slow speed lines, opening the door for a potential pullback to the last or second last breakout forecasters that presented here, and they're in the 18,460 to 80-ish area. So not a pernicious pullback, one that very simply after stage 3 is done and you're in a buy sequence coming from a sell, well, it very likely establishes the bottom of a range that can push us back up. So technically, there may be some downside risk anywhere between where we are right now and call it 65 points lower for the S&P 500. That would be about $6.50 lower for the SPY, and that would be the last breakout forecaster. And from a NQ standpoint, from being at 18,800, there is some risk of us coming down about 325 points, but the likely outcome on such an event would be a push back up. Now, this could be constructed by a negative afternoon and a positive after hours, and there's many ways to come at it. But I want to trade what I see. So what I see is a bullish signal state that is weakening, but the NASDAQ is not at that stage of weakening, similar to the ES, which means it's the leading index to watch. And of course, if it does see the same crossover and prices start to come down below 18,650 or so on the NQ tomorrow afternoon, well, the risk down, as mentioned for both the NQ, as aforementioned for the NQ and the S&P E-minis, would be in play. Now, that doesn't mean it has to remain in play. And what you're hearing from me is decisively there's fragility in the market. The NASDAQ can open the door for it. Coming down and breaking below the 18,675 area would be that gateway. And it all then points to, well, what's the NVIDIA after the bell tomorrow likely going to do? So let's go take a quick look at NVIDIA as it ended the day today and look at where it's positioned on a volume weighted average price cone that goes back effectively to the beginning of May. What you can see, I hope on the screen very clearly right now, is that NVIDIA's price action is still holding above the VWAP, okay? It has come down from highs last week from being above this thicker pink line. Now, this is a bell curve tilted 90 degrees on its left-hand side. That's a half standard deviation, that's one. And the whole purpose of this is when you're really far away from normal, like the red line or higher, kind of like we were over here, there's a better chance for us to start some sort of a pullback or at minimum go sideways and consolidate. So we're not at that spot right now, which opens the door for tomorrow for a range on NVIDIA to take us up to the 2 standard deviation marker, or get really, really frothy and expect more of a pump and dump in that case, getting 3 standard deviations away. That would take us up to the 1060-ish area in price. The 2 standard deviation area would take us just above that $1,000 marker. And of course, the risk for more downside that could take us down to 850 opens up if 900 is broken. That's really where VWAP is. So if we put this together, the setup supports an up. The marketplace as it sits right now is showing some fragility. But as you've just heard, the NASDAQ is the index that has still got some time on its side. So we're going to watch it carefully, see if it is able to sustain above 18,675. That would be a risk line. And if it breaks below there, we may have a negative afternoon that can still be picked up by NVIDIA, but I'd have to be very cautious about that. And I certainly would want to see the S&P E-minis, okay, with the NASDAQ sustain above a level as well. And what's that level? Well, above the all-time highs would be the idea. Getting up and over the highs made technically last week, which were 53.49, and today we got up to 53.47 and a half. So within spitting distance, but not quite yet taking out those highs. So we tried yesterday, we got within a point. We've tried today, we've gotten within a couple of points so far. Future's not over, but as far as I'm concerned right now, I'd want to be on the side erring for, if the NASDAQ continues above that negative momentum shift, well, I want to see the S&P not dragged down by anything else and break out above the highs and see a run up towards that 53.72. In that case, assuming the afternoon tomorrow is not a negative, well, that sets up the market for a rise that may be short-lived, but a rise that could take the S&Ps up into the lower 5400s. I'm going to leave it at that. I hope that this gave you some perspective on the overall market move. Wishing you a wonderful rest of your day. Big thanks for watching, and see you in videos just like these in the upcoming days. Have a great rest of your day. And again, thanks for watching. Bye for now.